Hey, what's going on, guys? Corey Smith here, CoreFX, coming back with another pre-week analysis here for you guys. It is now Saturday, September 9th. Um, I live in South Florida, so I'm sure as any of you guys have seen with the weather, there's a barreling hurricane coming right at us right now, Hurricane Irma. I'm in the southeast coast near Fort Lauderdale, Miami area, so as you can see, the storm kind of shifted west a little bit. Isn't hitting us too bad now, but still going to be hitting us, and want to get this video done before I lose power and all that stuff happens. So yeah, I'm gonna try to be quick with this as well, as there's a lot going on here. But started here. This is just my web page. I just had it open up here for anyone that's not aware of it. It's corefxtrading.com. Got all different training opportunities here for you guys. But going on, moving forward, we have, as we usually do, we first will go over last week's news events, major events, top performing and underperforming currencies, and then we'll go over some technical analysis, and we'll cover this upcoming week, what to look for, what to watch for, what to trade around, and then as well we'll cover some technical levels and setups and analysis on some charts moving forward into this week ahead. I'm going to go ahead and jump right into it here. As we had last week, we had the top performing, as you can see looking at this, this basket of, this is each individual pair compared up against the US dollar. It basically just shows the relative performance of each individual currency. As you can see here, basically every currency was bullish on the week except for the dollar. If you look at dollar charts, the major currencies, you can see that directly translated into the price action on the charts. You can see the trends with the weak US dollar has continued, and it has continued very strongly this week. The US dollar is still being crushed. It's moved lower steadily all week and broke another daily support around the 92 level. It's pretty much now clear down to the 90 level, and it is at now 2-year lows. I know that we've been watching this and we've been bearish on the dollar as it's been breaking and retesting and breaking these levels as it goes down, but it broke another key level this week. And then moving on from here, we go over to the dollar on the hourly chart for the week. You can see where it opened Sunday, shot down, then we had a rally in the dollar, and then it slowly trickled down the whole rest of the week, ending the week lower down here. Moving on from the dollar, we had the euro. The euro was a decent performer, 1.46%. As you can see, we're starting to see these bigger moves again, guys. As I said, as the summer months come to an end, they're seeing 2% moves across multiple pairs, 1.5% moves. You know, we're starting to see some of this movement come back, some of this volatility come back. Not saying it's been the easiest trading environment, as it's been a little bit difficult with all the political uncertainty, national disasters, natural disasters, and all this stuff going on. But at least we have that volatility returning to the markets. So the euro was bullish on the week. As we go to the euro's chart, you can see it opened here on Sunday and just went up the whole week with a little bit of a sell-off Friday, but as you can see, it's been on a bullish uptrend still all week, and we came back up to these prior highs. We'll go over that in a little bit. I'll jump over that chart now, actually. Sorry, I'll go back and cover the dollar real quick. The dollar here, you can see this was the weekly support we were at, and as we broke it last week and came back up to retest, and I told you we were expecting it to most likely roll over after this, come back up and retest with this pin bar candle here, and price did just exactly that. Following this trend line still, price came up, rejected this, and rolled down, broke through and closed below the last week's support that it failed to break. So I expect pretty much the same kind of thing. We might see some sideways consolidation as we get a reversion to the mean with how far we've come from these moving averages, but all in all, still a bearish outlook for the dollar. Nothing's changed. And now on to the euro. We have it now broken right up to and at that prior high. It broke up above it, but then came back down and closed just below it, but right about up at that prior high. Personally, I'd expect it to retrace a little bit here and potentially fill this gap, and then possibly continue higher and set new highs. Again, just like the dollar, all signs are pointing north for the euro. We're still expecting it to continue higher, so that is what our outlook will remain. It's still strong, slowly gained strength all week, and is now at the new high that it made, and this is an almost 3-year high, so this is very, very high levels for the euro, and another thing to watch, and we'll be bullish moving forward here. Moving on from the euro, we've got the yen. The yen was the strongest performer on the week, closely up there with the Canadian dollar. But as you can see, it's opened here Sunday. We had a little bit of chop, and through the week we had some choppy movements, but it continuously moved up. We had a 2% increase in value this week from the yen. That's a big, strong move. As you can see with this chart here, price just there was no floors, no ceilings. Price just shot higher as it went higher all week. Broke out of the high now, as you can see here, but we'll move over to the yen's chart. You can see it broke above this weekly resistance here, this prior high, and closed with a little doji candle up top here above the resistance. But again, this is another level price hasn't been to in almost a year. So this is another significant level, breaking into the yearly levels. Broke and closed above this high. As we expected, it was kind of moving sideways under these resistances in here, and it managed to break above and close. So again, with the yen, bullish outlook across the board. There's nothing really telling me to look bearish for this. Moving on to the pound. Pound was another strong performer right behind the CAD. As you can see from this chart, opened a little bit lower and then just rallied up the entire rest of the week. Now is making a nice high base here under 32.50 on this. If we move it over to the futures charts, the index that we use, you can see price is now back up to this high. A couple weeks ago we were down here threatening to reverse the trend as we made a series of lower lows, and then as we hit this trend line again in this support area right here on 124.50, price rallied, hit this resistance, traced a little bit, and then continued to rally all the way back up to the highs here, almost at 129. As you can see, this is a again very bullish sign for the pound. As it comes up to this level up here, we can expect to see some potential either consolidation or pullback prior to breaking higher, or potentially reversing, double topping here and rolling over. But this is another key inflection point to watch, and again, very bullish on the pound, but I would expect a little bit of a correction or consolidation with these moving averages catching up to the reversion to the mean. Alright, moving on from there, we have the Canadian dollar. Canadian dollar, as I called last week, was going to be the currency to watch this week, and it lived up to the expectations. Although the Japanese yen was slightly more bullish, the CAD was definitely stronger impulses and was still over a 2% change on the week, which is a very big move. As you can see from this chart here, we had strong bullish move, slow consolidation. As you see all this was leading into the Bank of Canada announcement. As you can see, all these tiny candles, there's just not much volume in here. Prices at equilibrium as this small range just bounces prior to the announcement, which, as you see the spike in volume here and this massive candle, we had a huge jump in the Canadian dollar. But as you saw here, this has just been bullish all week. Moving into the chart, you can see here, as we came into the week, price had broken higher, and I told you guys we most likely were going to see this shoot and continue even higher. Thought there might have been a little more of a retest, but it's still no different. It came back down to the bottom of this prior candle and just shot up and has not looked back since. With the Canadian dollar, again, as with these other pairs, it's coming up and hitting these levels now here, these key areas. I'm expecting it to at least stall out a little bit or move down a little lower first and then continue higher. I don't see anything holding the CAD back. Fundamentally, especially, the CAD's my favorite pair bullish by far from now on through the near future. They've got awesome numbers coming out. They just hiked rates for the second time in a while, getting this contractionary monetary policy coming forward. And as we have seen, only the Canadian dollar and the U.S. have been hiking interest rates as we've had historical low rates out of this recession. But now we're starting to see a turnaround. Inflation's starting to pick up. Global growth is at a high it's been in a while. So the Canadian dollar is really, really benefiting from this, and I don't see anything really holding it back in the near future. So the CAD's a pair that I love. All bullish setups on here moving forward. Moving on from the Canadian dollar, we go to the Swiss franc. Swiss franc, as I've told you guys for the past few weeks now, I haven't liked the charts. They've been ugly, but it's been strong all week. chopped around a little bit on Friday, but as you can see here, we had a nice move from Sunday up, choppy, but it moved up nicely through the week and is now at this prior resistance. Moving on to the chart, we can see that price has now, as you guys see, this is the ugliness I'm talking about. This is just ugly chopping, nothing sturdy. But as you can see now, we're coming up to this 150 level here, and this is a very strong weekly resistance. It's a prior high it's been to, and this is where we could see some action. We could either see a rollover and continue back down to possibly the 98 level with some minor levels in between at 99.50 and 99. But this could roll over, or we could see this break out to a new high, and we could be looking at highs being made and prior potential upside up to 102. Now, as I'll cover with the Swiss francs central bank meeting this week, that is something that the Swiss government does not want. The Swiss National Bank does not want to see this continue to strengthen. They see their currency as very overvalued, but we will continue to see here. They do intervene in the forex markets to try to prevent this, so if this comes up higher, we could see some more buying of foreign currencies from the SNB that potentially reverse that. But all in all, we've got some movement going on in the franc that potentially could set some change in our outlook here with this choppy chart. And then moving forward from there, we have the Australian dollar. The Australian dollar has been on a rip higher, and you can see here it moved up all week. Friday it reversed a little bit, but it's still now coming back to retest this broken resistance, and it's still in an uptrend. Moving over to the chart, we saw this bull flag we went over the past couple weeks that it broke out of nicely, and it's just shot higher as we see it hit this weekly resistance here and is now sold off a little bit. I'm expecting it to potentially come down a little lower, down to around here, the breakout of the top of this bull flag. Potentially we could see a bounce off that, potentially reverse and go higher, and maybe even break this weekly resistance, and again, like the rest of the currencies we've been analyzing, potentially could move higher. I like it up to this 82.10 range or 82.30 range up here, anywhere along this 82 level. To the upside, and to the downside, if we see that reject off this, we could see a roll back over down to around 79.50 or so. And then we have the New Zealand dollar. New Zealand dollar has been a little bit mixed of late. This week we had strong move to begin the week, then a sell-off, then a very strong move to end the week up to Friday, and then another sell-off. All in all, ended the week up. When we go to the daily chart, you can see this head and shoulders we were talking about when it broke lower, then came back up, lower again, has come back up now. This 73 level is holding again as we see this massive wick, this huge pin bar candle here on this New Zealand dollar as price tried to break above 73, and the sellers came back, pushed it back down to 72.58, and it is now there. So I'm still looking bearish for the New Zealand dollar. I think it'll roll over and continue this downtrend down to, my prediction is the 71.50 range is easy, but my prediction is it'll go down to 70.50 all the way down here in the coming months, weeks. But that pretty much does it for the major currencies for this week and how they performed. Now for the major events of last week, we had, as we went over the prior week, pre-week analysis, we had a loaded week. Couple of central bank statements, unemployment reports, retail sales, inflation numbers, all kinds of stuff. So the main things I got out of this week was first of all, the Australian dollar's rate statement. They left, this is again a monthly meeting. They left the rates unchanged as expected at 1.5%, and the outlook remains relatively the same, and that is that the global economy continues to grow, but there is some uncertainty with, again, North Korea, geopolitical risk, inflation still staggering, things like this that we've covered. But there's some choppy price action on the release of that, and nothing really changed there, so it wasn't too great of a trading opportunity, but something to watch for still nonetheless. Other than that, we had the Canadian dollar Bank of Canada rate statement. This was a huge event, as I told you guys it would be, and as we predicted, it would be a strong mover on the week. I also had predicted there was a good chance that they would hike rates this meeting. I knew it would either be this meeting or next meeting, but I had a good feeling that it would be this meeting because they've just had unbelievable numbers and continue to have unbelievable numbers even after the rate hike. So Um, Really, they chose to do it this meeting instead of the next, and you could tell by the price action that it kind of caught the market off guard. But I think it was a good decision personally, and I mean, as you can see with the numbers continuing to come out of Canada, that's pretty much apparent across the board. They've been doing great economically. Employment, inflation's picking up. Growth's doing good. Commodity-based market, as you can tell, the commodities and stocks are doing well as well. So there's really no reason to keep their interest rates as low as they are. So I'm in support with this, and this was something that we saw coming here if you watch these videos. Next, we had the European Bank of England rate statement. I mean, central bank, European Central Bank. Sorry about that. In Europe, we had the European Central Bank rate statement. And as I had thought last week coming into the meeting, the euro's been crushing it, and it's been really strong, which could be detrimental to their economy over there. And as I said last week, I thought Draghi would come in and jawbone the euro lower and try to talk it down, try to pull back some of this bullishness. That was not the case. The euro actually continued higher after his lack of mentioning it, and the quantitative easing plan that they have, the decision to make, they're going to be making next month in October. So the euro continued higher. With the quantitative easing decision is pretty much just a quick breakdown of quantitative easing. It's when the central banks, it's a central bank, one of their monetary policy tools, in which the central bank itself uses their reserve money to purchase securities. For example, most commonly one is government bonds, but they can purchase other securities as well, and they use their capital to purchase these essentially from their own government. And what this does is increases the money supply. As they buy all these securities, they're sending money into these markets, and these banks and financial institutions and all are collecting this money as they're selling these bonds and securities. And what this does is gives financial institutions more capital, which is supposed to encourage them to increase their lending. Decrease interest rates as they have more capital to lend for all kinds of stimulative reasons. But people want to buy a house, they're more likely to buy with low interest rates. The banks have more money, they're going to lower their interest rates. Want to buy a car, same thing happens. Want to take out a loan to expand their personal business, all this stuff. So this is they have all options kept on the table, and next month we should have more about that. So the euro just continued higher as there was no dovishness or talking down of the currency by Draghi. And then on Friday, we had the Canadian dollar's unemployment rate, which was a great number. As I told you, even after they increased rates, they're still getting these great numbers. The actual employment percentage went down from 6.3 to 6.2%, and they increased the numbers of jobs created in August by a good amount. There wasn't much of a reaction to this, as the Canadian dollar had shot up so much from the rate increase that this is pretty much already priced in now, that these good numbers. And although that is the case, I'm still very much looking forward as a bullish CAD, very much so. And going over the rest of the events for last week, we had the pounds construction PMI. Again, these are purchase manufacturers index numbers. We've covered this a few times, but they missed expectations here on Monday. Went over Australian services PMI number, barely missed as well on Tuesday. And then Australian dollars GDP was right on target Tuesday as well. Wednesday we had Canadian dollars trade balance, which beat expectations. They had better than expected trade balance. The Bank of Canada's rate statement we covered. Manufacturing PMI out of the U.S. missed slightly. And then the Australian dollar missed both their numbers with retail sales and trade balance. As you can see here, they just missed expectations. On Thursday, we had the European Central Bank, as we covered. And then the U.S. dollar unemployment claims. This is a weekly report. It's done every week, 5 days after the prior week's end. And it's typically not anything that causes any movements, and that is because of the frequency of the report. Since it's released every single week, it's a more commonly seen number, and it's not really up to too drastic of changes, as week to week not too much can change. That's why a lot of these reports you see that we follow are going to be monthly, quarterly, 8 times a year, those kind of meetings, less frequent. But this is a weekly report. Typically doesn't do much, but as you can see, they missed the number here pretty big. The unemployment claims were expected to be 245,000, but there was 298,000, so that's a big miss there, and that contributed to the dollar's rollover. As you see on the charts, Thursday there was more continued rollover for the dollar. And this was a contributing factor. Again, it's every week, so it's not typically that off, but since not that big of a mover, but since it was that big of a change, it did move the markets. Crude inventories were higher than expected, and then we had pound manufacturing production beat expectations, so we're still getting a little bit of mixed signals here out of the pound. And then Canadian dollar unemployment we just went over. Also, Chinese numbers, these are both the inflation numbers that we read, CPI and PPI, from a consumer standpoint of view and from a producer's point of view, and you can see they beat both expectations there. So that is another sign that there's increased inflation picking up around the world, and we're starting to see some pickup in this as we look across the world, across the global economy. And now moving into next week, we open the markets on Sunday, September 10th. There's again this hurricane in Florida, hurricane in Texas, another hurricane in Mexico, North Korea, everything going on in the world. The money's been flooding into the Japanese yen, as we saw last week. There's been some risk-off moves. Stock markets I'll cover in a minute how they're doing, but they're not doing bad, so it's pretty much just the risk in the environment. And this week, Sunday, Monday, nothing going on. Tuesday, we begin with GBP pounds year-over-year CPI numbers. Again, this is an inflation gauge. Watch closely around the world right now in the global environment as inflation needs to start picking up as growth is continuing. And then there's not much else the rest of the day, Tuesday, and then Wednesday. Again, this is another pretty loaded week, guys. Like I said, this is starting to pick back up. Should be a great trading opportunity this week, and there's a lot of events to cover here. Just going to try to breeze through them pretty quick. And then Wednesday, we've got the pound's average earnings. Again, we've gone over this before, but this is a monthly report of the compensation businesses pay their workers, basically what average earnings are, what people are making at their jobs on average. And this is another really closely watched thing. Aside from this, we're also getting their claimant count and their unemployment rate. So this is a big event for the pound at 4:30 a.m. Wednesday, especially since we have them meeting later on in the week, the central bank, to go over its monetary policy. So these are numbers that are going to be watched very closely. And then Wednesday at 8:30 a.m. we've got the U.S. dollars producer price index inflation reading. This is going to have a big impact on the Fed. Whether they raise interest rates or not again in December, like they planned at the beginning of the year, 3 to 4 rate hikes. We've had 2. We'll see if December will give us another one. If it does, then these numbers are going to have to be positive because the Fed's pretty data driven, and this is the data they're watching. So we'll be watching for that. Again, crude inventory on Wednesday. And then at 9 p.m., 9:30 p.m., we have the Australian dollars unemployment rate and unemployment change. Again, as we know, these are monthly readings and these are great trading events. And then 10 p.m. right after that, another event that affects the Australian dollar, but also China, big economy again, affects the entire world and the entire forex markets, their industrial production. This is the production. Basically, we've gone over a bunch of times. Production sector drives the Chinese economy, and this reading shows the overall health of that sector. And this is the year-over-year ratings. This is a pretty big deal, something that'll be watched pretty closely, and will have an impact on the risk environment that we see. Moving on from Wednesday, we go to Thursday, and first of all, Thursday night, early a.m., out of the Swiss Central Bank, we have the LIBOR rate. This is their rate statement, their short-term interest rates that they determine, interbank interest rates. These are the same rate statements that we cover on all across the pairs, and this is going to be at 3:30 a.m. It's every quarter they announce this, and it's, again, like I said, the short-term interbank rates. The last meeting they had, they declared that the Swiss franc is still significantly overvalued, as they've been saying for a while now, and they keep their negative interest rates here. Basically, as they think it's overvalued, they're trying to make their Swiss investments in Swiss securities and all kinds of things less attractive. This will basically ease the demand for the Swiss franc, as there's not so many people wanting to buy their instruments, and this will hopefully devalue their currency. In the past 10 years, Swiss francs appreciated 50% in value against the other currencies, so it's been on a rip higher for 10 years now. And they do continuously intervene in the forex markets to try to weaken the Swiss franc. They do this by spending billions of dollars of their francs on reserve that they have purchasing other foreign currencies. What this does, like we say with a lot of things the central bank does, they want to control the money supply. This dumps supply of Swiss franc into the market, increasing the supply, which then decreases the value, hypothetically speaking. That's what they would expect to happen. If they buy a mass amount of the Japanese yen with the Swiss franc, they're now putting all these billions of dollars of Swiss franc into the market, no longer sitting in their reserve bank. Now it is freely in the market, increasing the supply, which should make the price of it go down. So basically, the rate statement, we're not expecting them to change the rate or anything. The monetary policy statement afterwards, the assessment right here, is what is more likely to watch their wording and see how they talk about the strength of the Swiss franc. I'm expecting them to be worried as well with the strength of it, as it's now, like we went over, back up to those highs, but we shall see what they say coming out of this meeting. Right after that, leading into 7 a.m., the pound has their bank statement. Now, this is their monetary policy statement and vote on their interest rate decision. This is issued every month. Last month, the Bank of England basically crushed the pound with its dovish remarks. They left the rates unchanged with a 6-2 vote, as for one, they thought that vote would be closer, and it wasn't, but also they decreased their growth forecast for the Great Britain for this year, the remainder of this year, as well as 2018. So that really hurt the pound, as they're showing the increased optimism in the growth of their economy and all. And for this rate statement, we're pretty much not expecting the rate to hike, but we'll see what these votes come out as. If there's any bankers that are swinging a little more towards wanting to hike rates or less wanting to. But the wording of the statement again is what to watch and see how they talk about it. They've had mixed numbers for the past month since the last one, so not really expecting any big drastic change, but we'll see. This should be a good event to trade as well. And then following that early AM, later on in the morning, we have the US dollar CPI and core CPI month-over-month readings. Again, these are inflation numbers that will be really closely watched. Unemployment claims, not typically something I cover to watch, but as you saw last week, occasionally something can come out of it. And then Friday, all we have is the core retail sales out of the US dollar. This is again another retail is a huge sector in the United States, and this is a big gauge for the health of the overall economy. And we will see what these numbers read. We read them every month, so go from there. Now, flipping over to technical analysis, as I like to cover at the end of every video, we like to see what's going on in some of these technical charts. First, I'll cover the main 7 majors, and then I'll switch into a few that I like, and we'll be done. With the euro dollar, as you know, the uptrend continues. We got a new higher high set on Thursday and Friday, as this daily candle closes above the prior candle high. So as we've been calling for a while now, I don't see any reason for this to roll over as of yet. Fundamentally or technically, everything's still pointing up. So as we had this break and close, and shooting star now closed up here, so we could expect, like this one closed, a little bit of a sell-off retest and then continue higher. Maybe even comes down to retest this trend line, this prior resistance down here. But all in all arrows are pointing up. Pound dollar, we saw in the past few months, we covered how it made a leg lower here and then made another leg lower here and was in jeopardy of reversing this downtrend as we came up to here above this weekly support. But price reversed, broke back through these levels, and has now shot up and broke multiple resistance levels this week and has come back up to almost retest this prior high. We're in a nice uptrend channel here on the daily chart. I should expect it to come back up to retest this weekly high. Again, we had a very bullish move, so we could have a little bit of stagnation, a little bit of retracement for continuing higher. Dollar CAD, it's been the same story. We're in a strong bearish downtrend, and has now, as we covered last week, broke these weekly support and trend lines, and now came down, broke another strong support level, and has bounced back up to retest it. Again, could expect some sideways movement or retracement, but all in all, I'm expecting price to continue lower with the CAD dollar as well. And then moving on to the dollar yen. Love this chart a lot. As you can see here, we're in a downtrend, then a choppy market at these above these support levels, and now on Friday we ended with a break and close below this strong 108.50 support here. So now we can see the downside of the yen's down to at least 106.50, down to this weekly support level down here, and we have a great downtrend now going on and breaking close below a key support. We broke this key support not long ago. Now we've broken this key support, and as you can see, we have room to the downside now for the yen. Aussie dollar had another breaking close of a high here. We have a massive shooting star, pin bar, gravestone doji, whatever you want to call it, candle here at this weekly resistance. This makes me a little weary of this higher high it set, as this is a strong level here that is at. Going back in time, you can see on the weekly chart it's much clearer, but it's acted as support, resistance, strong moves away, wicks, rejection, all kinds of stuff. Broke above this prior high, but is now sent this long wick here. So I'm very bullish still, but we could see some sell-off. I'll go ahead and show you guys here how I would expect to see this sell-off using core effects, what we do over here. So you can see this, the last impulse move to make this higher high began with this swing low here, came down, made a higher low, and then pushed up to make this higher high. So I'm going to use a Fibonacci tool here, drag it up from bottom to top. Let me switch this real quick so you can see it a little better. And as we can see here, price came up, hit this, like I said, showed this wick. Now I'm expecting a rally, a retracement down to, it could either come down to this 382 level here at this prior high, just a small retracement, and then continue higher, or we could see it come down to this 50% level here, nice strong zone as well here, bounce off this, and then continue higher. If this trend is to continue, I would look for a reversal around one of those areas. And then moving on to the New Zealand US, we had this basically the exact chart we were just looking at with the futures. We have this head and shoulders, came down, broke lower, came up, bulls tried to take it all the way up higher, but the sellers came in, bears came in, pushed it down lower, ended with this huge wick on Friday, and that's showing me that this bearish, the sellers are still going to be in command. I think this will roll back over, continue lower. Dollar Swiss franc, again we've got another Swiss franc. I haven't liked this chart, but now it is back to a good area. This strong weekly support broke this weekly trend line, strong sell-off, moving average crossover, rolled back down. Now I'm expecting this support to be broken, or we could see a bounce reversal, but I'm expecting this support to be broken as it'll get out of this range it's been in, and we'll have some trading opportunities finally back in the dollar Swiss franc. Now moving on to a couple other charts really quickly before we're done here that I like. I'm going to move on to the New Zealand yen. I like this chart. As you can see, it's been on a nice strong downtrend, broke the 200 SMA, and has been making some nice pushes lower. Now it is at this weekly support. We had this huge shooting star candle here as it's rejecting the buyers that tried to come in the end of last week, and we should see it continue lower here, and I like riding it down to the 76 area down here as we could see price continue to roll lower. And then another pair I like, the Australian dollar, New Zealand dollar. It's been ripping higher, no holding back, really far from these SMAs, so this could continue to base around a little bit up here, maybe pull back to test 1950 area, but all in all, great bullish signs in this chart. Nice high base pattern, high and tight right here. So I'm expecting this to continue higher. Pound CAD, I really like this chart as we've been in a great, you can see just how nicely this has been moving lower. Consolidates, lower, consolidates, lower, consolidates, lower, consolidates, lower now. Came back up to retest. One thing I don't like is how close this candle came to breaking back above this support, turned resistance. But if this manages to reverse next week, I love this short, and we will see what happens when the candle opens. Finally, I wanted to cover real quick the S&P 500 chart. This is the U.S. stock market index. I got a couple trend lines here that it's respecting, but we can see now price is in an ascending triangle. It's got a ceiling here holding price and going higher, and it's making a series of higher lows. This is a very nice technical chart pattern called an ascending triangle. It's a bullish breakout pattern, so we could expect to see price come, maybe retest this trend line one more time, come back up here, maybe stall a little bit, and then break out higher as we set new highs in the US stock market. Obviously, this could roll over, break this trend line, possibly retest it, hit this trend line, bounce around a little maybe, and roll over, and see some serious correction that we haven't seen in a while out of the S&P 500, but more likely, probability says the trend will continue, break out of this to the higher side, so I'm expecting that to continue higher. But that pretty much does it, guys. Thank you again for tuning in. I really appreciate taking the time to watch these videos. Check out my website here, corefxtrading.com. Also my Instagram, core.fx, Snapchat, and follow me and like my stuff and subscribe here on YouTube to catch these videos every week. Thanks, guys. Appreciate it, and have a good one.